Welcome back to another P2P talk. My guest today is Sergej from Indemo, and in this video we'll be talking about the current developments on the platform, such as the listing of mortgage-backed loans and plans with the secondary market. We'll be also answering the questions from our community, so if you are already invested on Indemo or planning to do so in the future, this podcast is for you. All right, so let's get started. Thanks for joining me today, Sergej.
Hi, Jakub, dear P2P Empower community. I'm glad to meet you once again. So let's roll in.
All right, so let's start with the developments in the past year. Last time we talked in September 2024. Back then you had assets under management at 4 million and you planned to release the mortgage-backed loans in the first half of 2025. Then we also talked about the secondary market. So what's the current situation with the platform?
All right. Yeah. So seems it was just 12 months ago, but it is really big lap we did in previous year. So overall, things are moving pretty well. So we had quite good and aggressive growth during the last 12 months. So as you mentioned, it was just 4 million asset under management. Now we are almost around 18 million under management, trying to get to the 25 million as we were planning for the end of this year. We'll see how it goes, as like 2 months left. In terms of the community, it was also growing. So now we have more than 15,000 registered investors, and active investors number counts around 10,000. It's about how we grow in the last 12 months. Also, this year was significant in terms of the new debt supply. We supplied, so we reached 100 debts listed somewhere in September. Soon will be around 150 listed so far. We had plenty of repayments, and the people and the community also. The traction, the results, also that this product is bringing quite attractive return. So overall, I would say on the key points, growth, new community members, development of the product, everything was smooth. Also, we were growing in terms of the team, so we're more than 20 now. So the new colleagues, new teammates joined us during the last year, which is also great result. And the thing I would say we would be willing to move slightly faster, it's some of the product development features we will discuss today, but there was objective factors like a regulator and other stuff. But at the end of the day, seems that we are back on track, and we'll touch upon this later on, I suppose.
All right, so let's talk numbers. Last time we spoke, you had 2 debt repayments with pretty impressive yields for investors. How is it now?
Yeah, so up to date, when we are recording, so it's end of October now. A total number of 13 repayments hit the investor accounts on Indemo. The average return for the closed repaid debts is around 22% per annum, which is pretty high, slightly overperforming the expected return which was provided since the initial launch, which was 15% per annum landmark. Overall, the closed deal shows that we are basically we get to the planned returns set for this product. Also from the closed deals, we see that the tendency that more debts which get to the alternative recovery scenarios as out-of-court settlement and sale on the debt secondary market, they brought faster returns, and definitely the analyzed return is also higher. With debts which go through the legal flow, then definitely it will be slightly longer repayments, but I suppose we still could deliver performance which is double digits one. So with a mix of cases, faster cases, longer cases, at the end of the day, I would say the average return should be around 15%, which was initially set when we were launching Indemo 2 years ago.
I've been investing on the platform for some time now, and I also got a few debt repayments with the yield of around 15%. I haven't heard from the community that anybody got less yield. Do you have some repayments where the return was lower than what you expected?
The past performance, which was shown for these 13 and that was the minimal was around 15, but definitely it's like as usual, as we told like last year when we were recording, definitely not all cases will be delivering returns which was shown in the previous year. I don't know, with 50% per annum, I don't know, 30, whatever. Some cases could be also slightly below 15. So it's a peculiarity of this product, but average one, like average temperature, like average hospital temperature should be around 15.
How many debts do you have under management right now?
It's close to 150 debts cases currently, which are spread among the investors' portfolios.
How does it impact your platform? Because you said you have hired more people, but also you're scaling up, right? So do you have any points that you can talk about, like how much your product is scalable also in the future and how it may impact investors' return perhaps?
Yeah, Jakub, sure. So good question. So here we should slightly elaborate that Indemo, it's like investment platform. So our key focus here is delivering good service, delivering good product, make our investor community happy. But there is also other leg of this business is that it's the partners who are supplying debts who are dealing with like key parts. It's like debt supply, administration of the portfolio, and also working on I would say the main key things in this product recoveries, repayments. So dealing with the legal flow, judicial flow, dealing with out of court settlement, and also like working on the debt secondary market to find the potential buyers on the to sell the debts on the later stage. And here definitely not just Indemo was developing, also our partners were working to scale up, to expand, and the setup of the debt servicing in Spain is based on the ability to find outsourced vendors, contractors. So they were looking for the couple of potential vendors in the last year. They found it, and basically now it's a simple thing. It's like Lego constructor. So you just add new constructors, new contractors, and you could scale up. You create the policies, you create the procedures, business procedures, continuity plans, and basically this business it is possible to increase portfolios to millions and even billions, because in the same way institutional buyers, institutional sellers in Spain work. So nobody hold team of 100, 200 people that set up the structure, cooperation structure, like with the legal firms, with servicing companies, with collectors, and basically it works. So I would say we were growing on both sides. One was Indemo to deliver good service, and the cooperation partners in Spain, Tamarindo Vector companies, they were doing their homework to make sure that the supply doesn't stop and the servicing also deliver good results, good returns.
We have had a question from a community member, and he was wondering, in case there is a property which, for some reason the evaluation was not correct, or you can just not sell it at a reasonable price and you will need to go into loss. What is the scenario in this case? How long would you be willing to hold on to that project? And at what point would you decide, okay, we will sell it at loss, and we'll communicate that with the investors?
Okay, good question. I would split it in a couple of parts to address. Well, first of all, we should slightly maybe touch upon, maybe we didn't last year, about that due diligence, which is made by our debt supply partners, is quite rigid. So they have a quite rigid institutional procedure in place. And from the statistics, just around 5-10% of the debts which come to as a stock to their table for consideration, only 5% gets really being bought and then listed on Indemo. So it includes quite objective valuation. So we use external evaluators, so external evaluators valuations, and also there is in-house expertise. So there is in-house valuator who double checks what the external one provided, and like last one is definitely Idealista, so big data tool which gathers all data from the market. So there is key 3 points to make sure that valuation of the property should be fair. It's one thing to note. So the risk that the valuation is completely, I don't know, crazy, well, it's probably this risk is very, very low. Also, as we are working with residential properties, not with development construction things, then also valuation could be quite precise. The second thing is definitely that the real estate prices in Spain are growing year over the year in the last 5 years, and last two years the growth was quite good, quite influential. So this is things that we are not reevaluating portfolio, which basically you see on your app in your portfolio. So you see the old prices of the real estate of the valuation which was done 1, 2, 3 years ago when you invested, but definitely the prices of the real estates, also what we see from the closed deals, they are completely different. They increase 5, 10, even 20% more. So like, to put it in the nutshell, then definitely, yeah, it might be a case, but we also don't. We also should not to forget that investors on Indemo, they invest at a market discount, depending on the like recovery stage when you choose and invest in the debt. But the average discount is around 30-35%, which also like allows to suffer even the market fluctuations if the market goes down. And like, to put it like in a summary, then once again I would recall the key investor document. It's a main document which is available on the website, which gives the rules how return for the Indemo product, discounted debts product, is set. Then yeah, also there is 4 scenarios, and one of them is adverse scenario. And under the adverse scenario, it said that real estate price was dropped by 15%. And even in that scenario, if, I don't know, some material mistake was made, which is why it's 15% drop, then even in that case, investor could gain up to 6% return, like in that case.
So, in your opinion, it's unlikely that we would see some losses for investors in the near future based on the recent market developments?
Well, I would say it's the risk is very low. What we could see, it's risk of timing. Probably we also 1 year ago we told like the main risk on Indemo it's risk of time, because we deal with external recovery process. There is several stakeholders involved, which in some cases it's impossible to influence them. So if the case takes longer, I don't know, it's not expected like target term of 2 years, it's 3, maybe in some cases 4 years, then the return might be 1 digital, so 5-6%. But I would say the risk that we see the capital loss is really unlikely with the like things I just mentioned. Valuation.
Do you have like a maximum time that is acceptable for you to hold the real estate?
Yeah, there is some sort of assumption used by the servicing company, debt supplier, when they buy debts on the market, when also they calculate at which market discount to buy the relevant debt, like to correlate the discount and legal recovery stage. So for these, they have a worst case scenario, which is through the expertise of the legal firm who are experts in the recovery, judicial recovery. They said that the worst case scenario is around 5 years. So some case when everything what could happen, worst case judicial recovery could take around 5 years. And this is basically, I would say, the worst thing could happen in terms of the investors will get their money back in 5 years. And this timing definitely will dilute the return, slightly decreasing it and then giving one digit return. But as I told, like, to see the capital loss, it's really unlikely. It should be a very dramatic drop. Basically, Spain should survive real estate market drop as it was in 2009 after the big financial crisis, which is also reflected in Akid as a stressed scenario. Then there was slight capital loss of 10%, I suppose.
All right, so when we are about to talk about financials, let's also cover the financials for Indemo as a platform. You have been growing a lot. I can imagine you spent also quite some resources into your growth, including production of videos, huge cashback bonuses, which investors can get when they increase their portfolios on the platform. So how is it going if you compare it with the revenue? I guess you guys are not profitable yet. Perhaps you can share some insights on that note.
Okay, yeah. This is also great questions. Yeah, definitely. When you are growing as a fintech, then you need significant resources to be used, and it's quite like the market is used to that. Fintechs in a first couple of years, up to 5 years, they might be like with a negative financial result. So Indemo is not exclusion. So from the start, we were building as a co-founders. We were building Indemo as a company focused on the valuation increase. So we are not just increasing we are in like amount of funding into the product, into the debts, the number of investors. We also increasing in our company valuation. It's one of the board strategies. So this year was not an exclusion. So we were raising several times during this year, and the valuation of the company within this year was around 9 million. So basically, Indemo was the price of Indemo is around 9 million according to the equity we were attracting. And in terms of the like forecasts, yeah, so we will close this year. Yeah, we have still 2 months, but the plan is that the amount of losses will be pretty similar to the level we had last year. But in terms of the revenue growth, definitely it was like several multiples applied as this weekend. This weekend we just passed the landmark of 20 million invested. So 20 million invested so far from since we launched. Yeah, and in terms of the like next year and then like next couple of years projects, then next year will be also quite active active year in growth. So we expect that the break-even point, so when we will get to the positive financial results, will be around end of the next year, when the portfolio, the total portfolio is around 45 50 million large one, and also the amount of funded debts on the platform is slightly higher than 2 million per month.
Mm-hmm. Mm-hmm. So should investors expect further cashback bonuses on new investments in the upcoming year?
I suppose, yes, it will be a good thing for our investors, definitely. Before we are getting to the secondary market, so it will be something that will help investors to grow their portfolios, so they are better prepared for the secondary market. And when the secondary market will be launched, definitely we will reassess the bonuses. So as soon as it's available, the first part of like last month of this year and first part of the next year, it's a good time for investors to take most of it from the campaigns we are launching. And
okay, so as soon as the secondary market is launched, the bonuses will go down, yeah?
Well, it's hard to say, but it might be a point when we should reconsider, because the investors will have, like, I usually say that in Indemo, we could make some comparison. If the product comes from Spain, it's like Sagrada de Familia, so it's basically a temple which is already ready, but still the building is in process. So in my view, the building get to the final heights at the moment we release the secondary market. So the infrastructure will be ready, the whole one, the primary, secondary market, all the things, and the feedback we got from investors will be already implemented. And then basically it might be a time for us to reconsider some campaigns or giving some promotions for the more loyal customers who are longer with us. So we'll see.
Okay, so let's talk about the secondary market. Last time we talked in September 2024. You said the secondary market will be launched the 2025 in the first half. Now we are the end of the year almost. So what has happened so far?
Yeah, so main challenge, I would say, so it's slightly delayed according to our initial plans, but it was like grounded by the objective factors. So main hold on to move to the secondary market was shifting to the one node, one debt. So basically the setup which allows investors to invest in individual debts, because the concept of secondary market we are basically invented. It will be based on the ability for investors to invest on the early stage, sell on the later stage, and without adding one node, one debt setup, it was impossible basically to start moving in that direction. And it is something that we were working for almost 15 months with the Central Bank of Latvia. So I'd say it's old legacy how the Central Bank of Latvia interprets the EU regulations, which set our I would say our product engineering. And we started last spring, and it was quite active discussion. And finally in August, like couple of months ago, we got the approval. So our new notes prospectus was registered, approved by the Central Bank of Latvia, and now we are in the final basically. It's just a couple of weeks left when we will launch one node, one debt, which will clear our way towards the secondary market. So we could go into that direction in the vision how we wanted to create the secondary market. So now in November, December, we will be working on the product launch roadmap, basically planning, setting the resources, and as we get to the start of the next year, the active coding, operations, and back office works will start. And the forecast is that in the first half of next year, so before the summer.
All right, so when we talked about the secondary market, you mentioned that the main use case for it will be with the one node, one debt structure. So what does it mean for all the investors who have multiple debts within one node? Will they also be able to sell them on the secondary market?
Well, it's still not decided, so it will be work around by the product team. So we'll see what will be the solution and decision. But overall, yes, I told to use most of the concept of the secondary market, how we visioned it. It definitely would be more beneficial for investors who will start investing in new type of nodes in a couple of days. We will launch it, as it will be much easier to use the market rules to set the price, to set the premium or discount when trading on the secondary market when it will be launched.
So when are you going to launch the one node, one debt structure on Indemo?
Yeah, so we are in the final, after the quite long journey I mentioned. So we are in the final lines. So it's a matter of a week or so. So now calibrating last things on the IT content. So definitely it will be a proper big bang launch with relevant tutorials and some good things also for investors. So definitely stay tuned and follow our main communication channels we use with our community.
All right, so let's talk about the mortgage-backed loans. That's been also on the table for the past over a year, maybe 15 months also. What's the situation with that?
Well, yeah, it was it was quite how to say it was quite dilemma for us whether to add this product now or introduce it slightly later. So we decided to make it later. It was several concerns. Of the main is that the return levels which can be provided for that product was it was around, it is one digit, so it's around 7-8% per annum, which might not be too appealing in the current circumstances, especially in the start of and the first half of this year, 2025, when the interest rates were still dropping. And now we see that there is a stabilization, and highly likely the interest rates in Europe will stay around slightly below 2%. So we could reconsider, and this product might be added. But I would say it will not be added before we launch the secondary market. So we want to, as I told, create the full infrastructure for the discounted debts, and then also we will be willing to add the mortgage loan. loans. Yeah, so I would say the mortgage loans were planned from the start of this year and will not get to the product earlier than the second part of the next year.
All right, so one more thing about the features. Some of the community members have issues with the auto invest. I know that you need to pass certain tests in order to get it activated. So can you elaborate on who the auto invest feature is available for?
Yeah, so just a short intro, like how it was going with Auto Invest. The concept of Auto Invest as it is now, it was launched as we launched the Indemo 2 years ago. Then, as I mentioned, 15 months it took us to get to the one node, one debt. So it was unlogically, so that doesn't make sense for us to change the Auto Invest well before we get to one node, one debt. So we were collecting all the feedback from investors. So we are now well prepared, so we have a good feedback, very valuable feedback from the community, how to revamp the auto invest, and basically now it will be next feature release after one node, one debt. So we go out with one node, one debt, and in a couple of weeks, all work is already in progress. We will revamp the auto invest, so it will allow investors. It will be more synchronized for investing in individual steps. So you will the investors will be able to create more customized portfolio, to use the new filters. So we added new one node, one debt will go out, not just a new node type. It will go out with totally reworked and revamped platform interface. So it will be primary market interface, which will stay till the secondary market. So new things which investors will see, it will be filtering options, so we will be able to filter and create more customized portfolio, either manually or through Auto Invest. So Auto Invest will be allowing to set the same filters. Also, the community was asking like automated wallet. If you make the deposition of the money to your Indemo account, so if you set the Auto Invest, the money automatically will be added to topped up to Auto Invest wallet, not as it is now by manual addition. So it things which will rework the Auto Invest, and definitely we will be working harder on the customer and clients education for them to be able to pass the suitability and appropriate tests better. Now there is some set for the end of November, start of December.
I would also like to follow up on the one node, one debt system. For old investors, is there going to be some change with the old node types, or everything remain the same and they will just switch to investing into new assets via the new system?
Yeah, it will be a smooth transition. So as soon as we launch it, announce it, then basically the old node types, they will be taking off the market. So we will not be able to invest in them anymore. So it will be just possible to invest in new type of nodes, and we'll see what would be the feedback of investors. I hope all of our investors will like the new type of nodes, but if it will be strong demand that investors will be saying, Sergej and the team, please return the old type of nodes, we will consider this definitely. But one day, X date, it will be just new nodes available on Indemo, so it will be totally new experience, totally new interface you will see at that date when we will go live.
What is currently the average portfolio size of active investors on Indemo?
The average portfolio is around 5,000 euro, pretty close to the other marketplace have. We see that with the last year growth and things we are adding, the recent promo campaigns, repayments. Also now we added the customer relationship function, so we have a new teammate joined us in September. She is already getting acquainted with customers who is holding slightly higher portfolios, and now we are working also on the loyalty program. So this trend might be that average portfolio will be growing. I will be definitely, and the company will be definitely happy if it will be growing to the higher amounts and higher numbers.
I got a question from a community member who would like to significantly increase his portfolio. However, his issue or concern is the geopolitical situation currently in Europe. The war in Ukraine has affected a lot of Europeans and investors. And the main question was, in this scenario where the war would expand to the Baltics, what would happen to Indemo, to the investments, to the infrastructure, to the operations? So can you perhaps share your scenario of how this could unfold for investors?
Yeah, sure. So yeah, definitely our team and I hope other community and broader communities stays positive on that development. So it should be all good, I suppose. And then also war in Ukraine should go to the end in the coming close time, I hope. But definitely, yes, we are licensed market player, MiFID investment firms, and we have a list of contingency plans and other things. And also on the strategical development, we also discuss this topic with our co-founders board. And also definitely the community is asking this question to me at least once per week. I would say we look very practically, and we are better prepared for this occasion because the investors' capital invested in discounted debts, it doesn't stay in Baltics, in Latvia for a long time. So we settle weekly with our cooperation partners. So basically the invested capital is being transferred to the Spain weekly. So it's just uninvested balances we have, but they're not significant ones. And definitely the investment platform is a place to invest, not to hold the cash. It's one thing. So the capital, the supply, the product itself, it's in Spain, and Spain most likely is the most farthest geography from the Eastern Europe in Europe. It's one thing. Other thing is that we are also discussed this topic, and then we'll discuss this with as we are member of the FinTech Association of Latvia and other professional associations. So we also in contact with the Central Bank of Latvia to address what will. Okay, so that if we look into the infrastructural part of the Indemo, Indemo is based on the cloud services, so we could work and the platform could work from any part of the world. We build it from very beginning, not to be dependent on some location. The license, supervision, regulator, it's something that it is in Latvia. Also the bank accounts we have, one is in Latvia, other one is LTV Estonia, but LTV Estonia, LTV Bank is also considering they have as a UK bank. So we spoke with them, they could switch to the other bank. So at one thing, if I don't know, something goes very, very hot on that direction, they could switch that the investor will be using not EE like Estonian accounts, but they will be using the GB UK account. It could be also the measure to decrease the risk. Then also currently the Indemo team, we are situated in different geographical location. Some part of operations are present here in Riga, some part in Germany, some part in to getting more talented people. This diversification of locations will be increasing even more. So I would say the open question would be, are there the plan B of Latvian state if shit hits the fan? So it's something that we are discussing with the Central Bank of Latvia. So most probably in the EU, there should be the mechanism, even the black X hour comes, that the MiFID license, bank license, which is issued in one EU member state according to the common standards, common regulations in EU, could be transferred freely to other member state which is not impacted by martial law. But it's I would say will be the challenge for the whole Europe. But in a nutshell, I would say the main risk the investors faced when it was war in Ukraine, when they invested in consumer loans or real estate loans in Ukraine, definitely it was impacted by war. In our case, it's Spain. Spain should not be affected by war, even if the turbulence arises in the eastern part of Europe.
However, investors still need to access the platform, right? The main operations, the headquarters are in Latvia. So in the worst case scenario where there is a military conflict, and investors will, the team will probably not be able to operate from your offices, right? Do you have any contingency plan of how that would evolve?
As I told that we are currently we are building more self-confident team in Barcelona. Barcelona in Spain. So one of the next stages could be that there is a contingency plan to switch to the Barcelona office if this happens. All in all, as I told, like technical infrastructure will be working while in our case it's Google Cloud. Google Cloud infrastructure will be working. So I hope with Google it should be all fine. But operationally, yeah, it might be slight delay, as we told, like shit hits the fan. But we will be looking in that direction that we have a covering team, or at least minimal covering team in Barcelona to cover if Riga is down for some while.
So in the scenario where, you cannot operate from the headquarters in Riga, let's say your team in Spain will be able to handle investors' withdrawals, investors' deposits, like the functionality of the platform, basically.
Yeah, so I would say there is several points. So one is basically the technical, as I mentioned, technical infrastructure. So it's unimpacted as soon as Google works. The second one is the financial infrastructure, so banks. So as I told, like here we are more safe because LCV has a affiliated bank in London, in UK. So most likely they will be able to switch the position from the Estonia to UK, then it's also safe. And the third one is definitely the team. So basically the people who are on a daily basis by hands, proceeding the deposits, the compliance, the withdrawals. So here, yeah, it's something that we plan to work on in the coming year to make sure that there is minimum but sufficient resource in Latvia to cover the problem if it arises. But as told, from the technical perspective, operational team could be situated, I don't know, Riga, Barcelona, or I don't know, New York, or I don't know, Malaysia.
All right. Okay. Thank you for all the answers. I think investors will appreciate all the insights. If you would like to learn more about Indemo, you can also subscribe to their YouTube channel, which is very educative, and you can they release podcasts pretty much every quarter, informing investors about the latest developments. Also, if you would like to get more information about Indemo, you can look up their website or directly on P2P Empower in our Indemo review. Sergej, thanks for your time, and I wish you all the best with the upcoming platform updates.
Thanks, Jakub. It will definitely help us. It was a pleasure for me to meet you once again, and I hope we will meet in next year as a good tradition.